What's going on, what's happening? You're back here on this video, and I'm glad that today we are going to be looking at the risk management strategies that you can be able to just apply, just so you are able to continue building out those 5 habits that we've been speaking about from the previous videos, and then you can be able to become one of the best traders that you know. So on today's video, what we'll be looking is, we are going to be looking at the risk management rule that save traders from blowing accounts. One of the worst things that I do not like seeing is when people tell me that they've blew an account, and I ask myself, how do you even go about blowing an account when there are risk management methods that would be able to help you so that you are able to just go into not blowing an account. And obviously this adds up onto the lessons that we've been looking at on the previous video that we did speak about. We spoke a bit more about how you can go about building a winning trading plan. So this is definitely going to be one of those best valuable lessons. So I do have my presentation right here in front of me, so let us now get started and dive a bit more deeper into this valuable information. Obviously, if you believe that everything that I share is valuable, you are learning something, the only thing that I need from you is to like this video and as well subscribe to my YouTube channel. I noticed a lot of you guys actually do watch my videos, you comment, you give positive feedback, but maybe you forget to hit that subscribe button. So if that is you, make sure that you hit it right now. Let's get straight into it. On today's video, we are going to be looking at the risk management rule that saves traders from blowing accounts. Risk like a pro, the trading secret that keeps you profitable. What you will learn on today's video is most traders lose money not because of bad strategy, but because of the bad risk management. And as well, if you don't manage risk like a pro, you'll never be consistently profitable. No matter what, even if you have the best strategy, as long as you don't manage your risk how we are going to be showing you, or even in a better way, most definitely you'll never be a consistently profitable trader, because with the lack of risk management, it means that you'll continuously blow your account. You'll continuously lose more than what you're comfortable with, on which we are trying to help you so that you don't go through all of that. So what we'll be looking a bit more on deeper is how to use the 1 to 2% risk per trade rule, and as well why stop loss discipline is very crucial, and then how to avoid revenge trading, especially after losses. And one thing that I like is that stick around, because I'll show you exactly how pros manage their risks. One thing that I've been able to be fortunate about is I've sat with professional traders, see them trade. I've also got access into some of these courses whereby traders are showing us how they've done it. So that is one of the things that I have. That's why I highly believe that you just being able to watch this, you would be able to learn a bit more better. So let's get straight into it. The 1 to 2% rule, never risk too much. So the first thing about this rule is never risk more than 1 to 2% of your account per trade, meaning that on every trade that you're placing, never ever risk more than 1 or 2%. In fact, for me, when I do happen to experience a series of losses, if I do happen to take 2 trades that go against me, I even reduce my risk, meaning that I can even risk as low as 0.50%, and I can even risk as low as 0.25%, just so I'm able to stay longer in the markets. Example, if your account is on $1,000, risk should be $10 to $20 per trade. Most people, they're risking $100, $200 trying to double their accounts. That is the best way to blow your account. But if you are looking into growing it, then you should be able to at least risk $10 or $20 per trade. Imagine if you find a trade that's going to give you a risk reward of 1:3. Already with risking $20, you are going to be making at least $60, which is 6% of your account. So that is one of the best ways that you can see this. This prevents account blowouts from a few losing trades, because in the markets, no matter what strategy you have, there will be a time where you go through a series of losing trades. So we don't want, when you're going through a series of losing trades, you lose your whole account. That is why we're giving you these methods that's going to be able to help you stay longer in the game. Small risk is equals to psychological control and long-term growth. A lot of people blow their accounts because they risk too much, on which emotionally it disturbs them. They are sad, they are angry, depressed, and all those things. It's short-term, man, because you don't really stay long in the game. But if you're able to use methods like using small risk, automatically, psychologically, you'd be fine, you'd be happy. Plus, on top of that, you're able to stay longer in the game. Stop loss discipline, you need to protect your capital. always set a stop loss before entering a trade, no matter what. Just when you enter a trade, you need to know where your stop loss is going to be. A lot of people, they see the market shooting down and automatically they say, yo, I don't want to miss out, I don't want to miss out. So they try to execute trades while it's moving, but they don't look at where their stop loss is going to be. So as soon as they enter, trade now is going against them. Now they're looking at, they don't want to close a negative because they feel like the market is still going to go down, you see. So we need to avoid that. Stop loss helps. It limits your losses. It removes emotions from trading, and at the same time, it keeps you in the game long term. Ultimately, when it comes to stop loss, you'll be able to limit your losses, which means that you will never lose more than you are comfortable with. At the same time, even emotions, you won't really be depressed or stressed or worried or mad just because of you knew what the risk was before you even placed the trade. And then you stay longer in the game because of the fact that if you lose more, you blow your account. But if you are able to use the stop loss, you're not going to lose more. You're going to be able to protect yourself. And at the same time, you're able to trade for as long as you want because no matter what, you are respecting your risk. One of the common mistakes that I've seen is moving or removing stop losses after entering a trade. That is very, very, very bad because people enter a trade and then once the trade is now moving, let's say it's going against them, they're like, oh no, it's gonna, it's gonna work out. So they remove the stop loss, so they move it and they keep on moving it. That is the worst way, guys. If you are doing that, please, I need you to change using those methods because that is one of the worst ways that you can go about losing your trading capital. One of the pro tips that I've learned is that use the ATR, which is the average true range, or in an uptrend, rather put your stop loss in higher lows. Let's say if it's higher high, higher low, just before it goes higher high, put your stop loss on that higher low. Or if it's a down trade because it creates a lower low, lower high, and then a lower low, just put your stop loss above that lower high in a downtrend. Or one of the things that you can use as well is support and resistance to be able to set a proper stop loss. And one thing that I also want to mention in terms of protecting your capital is having a re-entry method, meaning that if you have a trade and you have a stop loss and a trade goes and it hits your stop loss, you need to be able to, if the trade is still valid, re-enter it, but re-enter it reducing risk, even if it means using now 0.30% of your capital, because this way it allows you to be able to ride on that trend if it happens to be in the right direction, but at the same time it still allows you to not lose more the more trades you take. So how do you go about avoiding revenge trading after a loss? What actually is revenge trading? Trying to make back losses immediately with emotional trades. You bought, price went against you, then you feel like it's selling, then you now close that buy, then you sell, then it goes against you, then you don't know what to do. Now you are trying to make back money that you've lost. That is revenge trading. Now we are trying to avoid doing that. Why is it dangerous actually? It leads to over trading and as well it leads to bigger losses. No matter what, guys, when it comes to revenge trading, I've been doing this for over 8 years, which means that I've seen myself revenge trade. I've seen people that I was close with revenge trade, and I've seen it never really pays off. You'll never get a payoff from revenge trading. It's one of the first things that you need to stop immediately if you can. How do you go about stopping? You need to take a break after a loss. Stay away for at least 5 to 10 minutes. If there was like, a loss that was like, let's say 2%, 3%, stay off from trading for the day. If you've lost, let's say 2% for the day, stay away from trading for the day. If you've lost like 5%, stay away from trading for at least a week. You understand? So the more you lose, the more longer time frame you need to stay away from the markets. Review what went wrong. Was it a mistake or just part of the strategy? You need to be able to see what actually went wrong. Was it a mistake that you made or was it the strategy that you are using? And at the same time, you need to stick to the plan. Never increase risk after a loss. Most people, as soon as they take a loss, they try to increase their risk because they believe when trades go in their profits, they're going to be able to make more money. But that is not how the market works. In fact, you need to decrease your risk. And one of the best things that I can say is that if you master these risk management rules, you'll trade with confidence and consistency. And this is one of the best ways that you can grow, whether it's a small account, whether you're trading with a big account with capital, because if you can't manage a small account with these risk management strategies, automatically, even when you have big capital, it's going to be hard of you to manage that because of anyways, you are not worthy of being able to respect the capital that you're trading with. And one thing that I'd love is I need you to drop this emoji that you are seeing right here on the screen in the comments if you're committing to proper risk management. This is only if you are saying that, you know what, I've been doing this, I've been taking losses because I'm not respecting risk, and I'm really looking into committing. Because dropping this emoji, what it will do is that even when you are now breaking your rule in the future, you remember that, no man, I made a commitment that I'm gonna use proper risk management by dropping that comment, especially in the dollar sign, which means that I'm looking into preserving my capital and protecting it. So that's just one of the best ways that you can go about committing to yourself. And as well, I need you to watch the previous lessons in this 5 habits of profitable traders playlist that I've created, which teaches you about building a winning trading plan. And the next video is going to be a bit more about sticking to 1 or 2 strategies. So make sure that you do follow through with this playlist. And one of the last things that I can say to you is, I've seen a lot of people would love to be involved in a community whereby it's a channel where we are able to share, whether it's updates, whether it's trading tips, or whatever that we come up with when it comes to the markets. And what I've done is that I've made it easy for a lot of people to get access to it. The very first link that you are going to be able to find in the description section is where you'd get access to our Telegram group. Even in the comment section, the first comment that's going to be pinned is going to be of our Telegram community, whereby you'd be able to just join in there and join other thousands and thousands of other members that are on the same journey with you, so that we are able to grow and we grow together, and you do not miss out on each and every single resources that we share. But that's it for today's video. I'm glad that you guys did watch up until this end. I will see you in the next video. It is your boy Liswa Mutupi. Make sure that you like and as well subscribe to my YouTube channel. Thank you so much for watching.